channel. Today I want to share about jobs in accounting. Finding a job in accounting field is a smart decision. Accounting is a field that will always be in demand, and it is a field that you can continue to grow and move up inside your company. There are so many different positions you can find in accounting field. Careers in accounting can range from entry level to executive level position. Today I will explain four jobs in accounting. And first, accountant. An accountant is a person who records business transactions on behalf of an organization, reports on company performance to management, and issues financial statements. Here are several examples of the type of transaction in which an accountant may become involved. Issuing an invoice to a customer, which involves recording a sale and account receivable. Second, receiving an invoice from a supplier, which involves recording an expense or asset and an account payable. 3. Issuing a salary or wage payment to an employee, which involves recording an expense and the outflow of cash. And 4. Reconciling a bank statement, which likely produce adjustment to the cash account. In addition to transaction recordation, an accountant produces a number of reports. The key types are as follows. First, financial statements are issued to the owner and or operators of a business, as well as to lenders and other creditors. The financial statements include the income statement, balance sheet, and statement of cash flows. 2. Management reports are issued to the management team. The reports are highly customized to the needs of each entity and may cover such topics as the sales of certain product lines, investigation of cost variance, sales returns, and an analysis of overtime incurred. 3. Tax reports are issued to several government entities. The reports provide detail regarding the amounts paid for income taxes, property taxes, sales taxes, use taxes, and so forth. An accountant may also be involved in the creation of a number of processes within a business, which typically include several controls to ensure that assets are properly managed. Examples of such processes are 1. Shipment to customer, 2. Receipt from supplier, and 3. Cash receipt from customers. There are many subfields within accounting in which a person can specialize. For example, there are a tax accountant, cost accountant, payroll clerks, inventory accountant, billing clerks, there are ledger accountant, and collection clerks. This level of specialization is needed in order to increase the efficiency with which certain tasks are conducted. An accountant may choose to pursue a certification, of which the most prestigious is the Certified Public Accountant or CPA designation. A CPA license is required before a person can audit the books of a client organization. Second is bookkeeper. Bookkeeping is the recording of financial transactions and is part of the process of accounting in business. Transactions include purchase, sales, receipts, and payments by an individual person or an organization or corporation. There are several standard methods of bookkeeping, including the single entry and double entry bookkeeping system, while this may be viewed as real bookkeeping. Any process for recording financial transactions is a bookkeeping process. Bookkeeping is the work of a bookkeeper or bookkeeper who records the day-to-day financial transaction of a business. They usually write the day books, which contain records of sale, purchase, receipts, and payments, and document each financial transaction, whether cash or credit, into the correct day book. That is petty cash book, supplier ledger, customer ledger, etc., and the general ledger. Thereafter, an accountant can create financial reports from the information recorded by the bookkeeper. Bookkeeping refers mainly to the record-keeping aspect of financial accounting and involves preparing source documents for all transactions, operations, and other events of a business. The bookkeeper brings the books to the trial balance stage. An accountant may prepare the income statement and balance sheet using the trial balance and ledger prepared by the bookkeeper. The bookkeeping process primarily records the financial effect of transaction. An important difference between a manual and an electronic accounting system is the former latency between the recording of financial transaction and its posting in the relevant account. This delay, which is absent in electronic accounting system due the nearly instantaneous posting to relevant accounts, is characteristic of manual system and gave rise to the primary books of accounts, cash book, purchase book, sales books, and etc. for immediately documenting a financial transaction. Third, tax accountant. For those needing professional assistance to handle their finance, having a professional tax accountant is a good choice. Tax accountants are the financial expert who understand all the government rules and regulations that determine the amount of money owed to federal, state, or local agencies. Not only can this professional find the appropriate ways to save money on tax owed, but they can also advise clients about managing their assets to minimize tax penalties, inform them of changes in tax laws, and assist them in any legal disputes or audits that arise. For potential clients, choosing the right tax professional means understanding the training, credentials, and specializations that tax accountants may possess. Accounting school graduates can work without certification in general bookkeeping and accounting jobs for finance departments of private and public institutions. State and federal governments, however, requires tax preparers to hold appropriate certification before becoming licensed to practice in certain jobs. Two certification paths are available. One is CPA or Certified Public Accountant. A CPA is licensed at the state level to work with tax documents and file paperwork with the U.S. Security and Exchange Commission. CPA candidates must complete approximately 30 hours of coursework about the level of their bachelor degree. Many undergraduate programs now include this training in their curricula, so the student can take the rigorous CPA exam upon graduation. And number two, enroll again, or EA. While a CPA is licensed at the state level, an EA has passed certification requirement to be licensed by the federal government. An EA specialization in taxation and has the authorization to represent clients in ERS proceedings. To earn an EA certification, candidates must study to pass a comprehensive tax law exam or have worked for the ERS for a minimum of 5 years interpreting and applying tax codes. Finally, keep in mind that to combat the complexity of tax law, tax accountant specializes their practice to become expert in certain areas. For example, business will consult with tax accountant who understand their specific financial management needs, such as contract law, wages, and compensation practice, income reporting, inventory distribution, or asset liabilities. With the right type of certificate, tax accountant, business and people can be assured of receiving the receiving the appropriate expert advice required to protect their financial interests. And the last is auditor. An auditor is a person authorized to review and verify the accuracy of financial records and ensure that companies comply with tax laws. They protect business from fraud, point out discrepancies in accounting method, and on occasion work on consultancy basis, helping organizations to spot ways to boost operational efficiency. Auditors work in various capacities within different industries. Auditors assess financial operations and ensure that organizations are run efficiently. They are tasked with tracking cash flow from beginning to end and verifying that an organization's funds are properly accounted for. In the case of public companies, the main duty on auditor is to determine whether financial statements follow generally accepted accounting principle or GAAP. To meet this requirement, auditors inspect accounting data, financial records, and operational assets of a business and take detailed notes on each step of the process, known as an audit trail. Once complete, the auditor's findings are presented in a report that appears as a preface in financial statements. Separate private reports may also be issued to company management and regulatory authorities as well. The Securities and Exchange Commission, or SEC, demands that the book of public companies are regularly examined by external independent auditors in compliance with official auditing procedures. Official procedures are established by the International Auditing and Assurance Standard Boards or EAASB, a committee of the International Federation of Accountants or EFAC. This is now from this vlog, and thank you for watching.